Welcome to another video. Today we will be speaking about how you're supposed to be spotting high probability reversal zones in the market. So how to understand when the market is shifting from a bearish market to a bullish market, and how to understand when the market is shifting from a bullish market to a bearish market, and most importantly, how to capitalize on those moves. So the video will be very educational and I suggest you to watch it until the end. Now, if you're new to the channel, I'm a top author on TradingView platform and I share free education and analysis each and every day on all my platforms. So I suggest you watch this video because it will be filled with value, and you can subscribe. Okay, so what we will be speaking about in this video is trend reversals and how to profit from them. Now, first of all, I want to show you which are the key elements that you have to check when you're actually identifying a trend reversal and a trading opportunity that basically looks at capitalizing on a possible trend reversal. So let's speak about, first of all, what you need. You need to identify a reversal pattern on the time frame or higher. Why did I say this? First of all, what do I mean a trend identify a reversal patterns on the time frame? So if you're looking, for example, at the daily time frame, okay, if you look at the daily, you have to check for a reversal patterns on the daily or on higher time frames. So if you are on the daily time frame and you see an uptrend, okay, you have to be looking for a reversal patterns either on the daily time frame or on higher time frames like the weekly or the monthly. Okay, this is the first very important topic. If you're looking at the weekly and you want to see and you're looking for a trend reversal on the weekly, then you have to be looking for a weekly reversal patterns or reversal pattern or a monthly reversal pattern. Very, very important. Then after that, if you have identified a trend reversal, at that point, what a trend reversal pattern, what are you supposed to be doing? Checking the COT data. Now, what is the COT data? The COT data is basically the commitment of traders, specifically non-commercial traders. That is what you have to be looking when you're looking at the COT reports and basically building your tables. You have to look at non-commercials. Why the non-commercials? Because they are the biggest speculators in the market. And basically you want to be following their orders, okay? What they're actually doing in the market. Let me explain better. If, for example, you have a market that is moving to the upside, okay? And for example, you spot a reversal pattern, like for example, a double top. Then a very basic and simple pattern. Everybody knows what a double top is. Then what you have to be doing, you have to be checking the COT data and see, okay, during this uptrend, specifically in this last wave, what hedge funds and big institutions have been doing. Have them been longing, basically have them been adding longs. If they have continued to add longs during a move to the upside and closing out their short positions, then definitely you don't expect the market to actually make a double top, but you expect the market to continue higher and break above the high because they are continuously adding longs and closing their shorts. On the other side, if you check the COT data and you see that they're starting to close their longs or even continuing to add longs, but at the same time, they're starting to add their shorts, then what do you expect? If you have a double top and basically the market is approaching this double top, but while it is approaching it, you see on the COT data that banks, for example, here on the US dollar index, what they're doing, they are, yes, adding the longs as you expect in an uptrend, but at the same time, they're already starting to stacking up their short positions. What does it mean? It means that they're using the liquidity of people that are buying the US dollar to actually place their sell orders, and when they will have placed enough sell orders, what will happen? The market will drop to the downside. And this is exactly the concept that we used in the trade that we took with students that I will be now reviewing basically for you guys to make you understand a live example basically of this concept. So first of all, identify our reversal patterns on the time frame or the higher time frame on which you're looking for a possible trend reversal. Second step, you have to check the COT data and see if it is actually showing the same thing that you want to be seeing basically from a technical perspective. Third step, just because you have a reversal pattern and COT data is confirming it, doesn't mean that you can just take the trade. You have to wait for confirmations on the 4-hour time frame, because things in the market can change very quickly, as you know. So you always have to basically be stacking up as many odds as possible in your favor. Therefore, you have to be looking for possible confirmations always on the 4-hour time frame, no matter where you're looking for the patterns, and obviously not the COT data, but when you're looking for confirmation, always on the 4-hour time frame is the most accurate time frame to be looking basically for possible confirmations. And by looking at an intraday time frame, what you will be able to do is position yourself with a high risk to reward. Meaning, if you're risking 100, you will be making at least 300. Therefore, if you take 10 trades, even if you're only right 3 times out of 10, you're still making money. So let's go and see the live example, so you will be basically fixing these concepts in your head. Just a quick reminder, make sure you comment below and you let me know which pair or topic you would like me to cover or analyze in the next video. Okay, so here we are on USD ZAR, and we took a nice position with students on this pair last week. So basically the last trading week, because today is Sunday that I'm basically recording this video. Now, how did we actually capitalize on this move? Why we were looking when the market was here to see this push to the downside. So basically the market was basically moving to the upside for many days. And what did we want to see the market from here drop to? So basically to make a retracement in this case, not really a trend reversal, but reverse the trend, at least from a daily perspective, from bullish to bearish for few days, specifically from an intraday time frame perspective. Why did we want to see this? Exactly for the reasons that I just explained to you, because on the daily time frame or higher, but in this case on the daily time frame, we had a reversal pattern. We had basically a market that had approached a very strong resistance, rejected the area, and then it was approaching it again very slowly. You can see that here basically the market had rejected very aggressively this resistance zone once. Nice push to the downside, and then here the market had already started to decelerate, basically more smaller candles showing smaller volume. So basically not much buying pressure. So the first check we have already given the market. Basically we have already checked that yes, there is the possibility to create a reversal pattern. Perfect. Now we have to check the COT data and see what kind of situation we're having. Now what we could see is that during this uptrend that basically was developing on the US dollar, what we were seeing shorts already getting open, specifically a new 953 shorts that were entering the market from an institutional level on the US dollar. So what we could expect the market to move to the downside. Also from a ZAR perspective, we knew that basically ZAR as well was getting stronger, meaning USD ZAR to the downside. So as you can see, we were basically looking both from a technical perspective at the possibility to create a double top after this basically deceleration approaching strong resistance already rejected once, so basically a double top. And from a COT perspective, we had the confirmation. Now, which is the last step, we have to check at what is going on from a 4-hour perspective. We have to see what is going on. Now, when it comes to entry, there are a couple of simple concepts that I can explain. Obviously, I can't tell you, just look at break of structure. That is not what we do with students, and I will not lie to you, just tell you, okay, look for break of structure and you will be perfectly fine. That is just one of the things that we check. And in fact, basically, I can't share all the rules of our entry strategy because that is part of the mentorship program, and obviously I can share it. But a couple of simple things that I can share. First of all, here we had a clear head and shoulders, break of structure, retracement to the 0.382, plus this trend line, plus structure, all lining up in this confluence area. Simple stop loss above the high, take profit at the first support zone from a daily perspective, giving us a very good risk to reward. This is basically the trade that we took with students last week on a US dollar ZAR, applying basically these concepts when it comes to identifying trend reversals. If you enjoyed the video, make sure you smash the like button and comment below. It really does support the creation of more free education and analysis for all of you. Also, make sure you go and check out the mentorship program. You find the link in the description. It's a very complete program. You first learn all the rules of my strategies and then you trade them live with me. Each and every day, I give you a new daily market breakdown showing you exactly how to apply the strategies with entry, stop, and take profit, as well as having me answering every question that you have each and every day. So I suggest you go and check it out, or go and check out the next video.